Good afternoon, everyone, and welcome to Stock Market Today. Ali Korm and Justin Nielsen here with a breakdown of the action in today's session, where the three major indexes finished the day basically flat, just a hair lower for each of the three major indexes. The Russell 2000, the biggest mover of the day, and on the downside, small caps finishing the day down about 0.7%. Justin, what stands out to you in this day that it was pretty mild by the end of the day across the board?
Well, it's not necessarily a day in which I wanted to take too much action, but it's one of those where you start looking for, are there some pullback opportunities here? Are there some breakouts still? Is there some strength? And in particular, we'll talk about volume today. So we'll take a look at S&P Global, SPGI, Antero Resources, because there was a big comeback in oil today. So that's in the oil space. And then also what was going on with Dollar Tree? Big move on Dollar Tree, DLTR today due to some activist investor activity. So we'll take a look at all three of those.
Okay, well, we'll dig into all of that. But first, let's analyze the major indexes here. So what do you make of where we finished today? The NASDAQ is still right around that 10-day line.
Yeah, and this is where I was really hoping for more of a pullback than what we got last week. I really wanted to see this go down to the 21-day moving average line, but we started snapping back at the end of the week. And today it's a little bit of a pause. What'll be interesting is to see how the NASDAQ composite contains itself around that $16,000 point level once it gets back up to that again, if it does. But we could go sideways for a little while. And although I didn't quite get the pullback that I wanted, sometimes sideways action can be just as good, because that allows the moving average lines to catch up a little bit. So it's not like it's coming down completely to the 21-day moving average line. Maybe it just pauses a little bit and lets that 21-day moving average line catch up to it. And that wouldn't necessarily be a bad thing.
Yep, that sounds pretty good to me. I'd take that. All right, and let's take a look at the S&P 500 as well. Just a quick check-in, coming down right around that 10-day moving average, closing essentially flat today. Still pretty solidly above that 4,600 level, which coincides with the S&P's 21-day moving average. And then here's a quick check-in on small caps, Russell 2000, which is tracked by the IWM ETF.
Yeah, definitely. There's nothing that's showing signs of either any of the indexes being broken, or we were concerned a little bit the prior week that things were getting a little extended. We've taken a little bit of the steam out, kind of put that safety valve out a little bit to let some of that extension come in a little bit, and that does help. So I think right now they still look healthy. It's worth mentioning that we did have the 10-year Treasury yield. If we pull up 0TNX, that's the way to look at the yield in MarketSmith. We did get back above that 1.6 level, and that does seem to be an area where your high valuation stocks do tend to get a little bit jittery up there. And so we did see some hits to growth in that regard. FFTY, that was down a little bit. That was down like 1.7% I'm showing. Not much volume behind the move down, but still that's where the 10-year Treasury yield, I think, is having a big influence on some of those big growth names.
Yeah, important to note the continued movements there. And now let's take a look underneath the surface. You mentioned a couple of setups still out there. So here's one for S&P Global, SPGI, a gain of 3.2% today, and a second session in a row with some nice volume to the upside.
Yeah. And so what I really was wanting to point out here is, look, if you see some pullback opportunities, that's kind of like what I'm looking for right now. So this one was a nice move on volume, on earnings, that caused that breakout. And then we've just had this nice orderly pullback. There have been some volume spikes in there. I mean, I would have preferred much lower volume, but what I like in particular is that the last 2 days you've had increased volume on the upside. And today in particular, after getting support at the 50-day moving average line, here you are kind of bouncing above that trend line that you pointed out. That's looking pretty good to me. You came down a little bit below the buy point, which some people might say, oh, well, is this a failed breakout? But it wasn't much, and it still got held by that 50-day line. So I think that that's okay action. And look, there's a lot of volatility in some names. This one is less volatile. This is one that just tends to be more of a steady mover, a slow climber. So you see a lot, when you look at the weekly chart and you see a lot of 3 weeks tight on it, that does give you a sense, okay, hey, look, this is something that doesn't move quite as much. So if you are wanting something a little bit slower, this might fit the bill in that regard.
Yeah. And for those that are slower movers, buying them when they're right close to that 10-week moving average can be a good strategy. And so SPGI about 2% above the 10-week line.
Yeah, this is one we stick on the long-term leaders list a number of times because you see that earning stability of 3. That's something that a lot of times will tend to lend itself towards these steady moves. And if you go to the monthly chart, you can kind of see how, again, it's not necessarily the gonna blast the doors off of your portfolio, but it does have that steadiness, and it does over time tend to outperform the S&P 500.
Yeah. And let's check in on the energy space with a look at Antero Resources AR, pulling back to its 50-day line and moving up about 2% today. We didn't quite see volume behind this one though, Justin.
That's definitely something I would have liked to see off of this bounce off the 50-day moving average line. And Antero Resources, look, this is one that I've been keeping my eye on because at that breakout above that 1428 buy point from a little double bottom there, this was one of the first ones out of the gate. You had a lot of stocks in the oil space, the US explorers and producers. We've been talking about this group for a while, but really it was Antero Resources and a few others that were the first ones to get into new high territory. They had the relative strength lines that were just really looking strong. So those are the ones that you want to look for the opportunities with these pullbacks. So I think here we had, again, a pretty orderly pullback. A lot of this was allowing that 50-day moving average line to catch up to the price level. So I'd like to see a stronger bounce with volume behind it. But right now, this is something that's looking interesting to me because this has been a strong space and possibly another opportunity to get in at this point.
Yeah, a setup worth watching for sure.
Mm-hmm.
And now let's take a look at Dollar Tree DLTR, a big move today, Justin, and it closed up about 14%, some pretty heavy volume as well. But this base is pretty deep and erratic when you compare it to some prior base structures. I mean, 30% doesn't seem that deep when you put a percentage to it, but the look of it feels a bit erratic to me.
Yeah. And I mean, maybe go to the weekly chart on this one too, because you can kind of see that, looking at the weekly chart, this is kind of a stock that really hasn't been going anywhere for quite a while. And one of the things that a lot of people point to is the Family Dollar acquisition that happened back in 2015. A lot of people are saying was just really a disaster, the way that Dollar Tree handled this. And so now you've got news that Mantle Ridge, an activist investor, is coming in and wanting to kind of put a little bit more pressure on the company to unlock some value for shareholders. He's got a $1.8 billion stake, that Mantle Ridge LP. Has that big stake that was announced over the weekend. You had a lot of upgrades in the stock today. I was reading an article, both Wall Street Journal and Barron's had articles on this. I think Market Watch did too. So all of our sister publications there were covering this pretty well. So that's something that's interesting. Look, the relative strength line on this is pretty poor, and I think that's a lot having to do with that acquisition. But retail has been an area of strength. This is something that we've seen with department stores, some leisure product retail, and apparel, shoes, you name it. So if this is something where this activist investor can come in, unlock some value here, that could be something that is interesting to watch. So going back to the daily, what am I looking for here? Maybe a little pause, let it digest this news. And if it can kind of go sideways a little bit, that might offer another opportunity to get in here.
Yeah. And Justin, I think you're very right to point out the longer term performance seen on the weekly chart. And if you look at the monthly, you can see that relative strength line peaked back in 2016. So
Yeah.
when you see a stock blasting to new highs, as we did today, important to put it in that context of where it's been, and it has underperformed the S&P for quite a while, but maybe this is the catalyst for that next big move. We'll have to see.
Yeah, and it's important to note that, look, sure, the stock is up from where it was, 4 years ago, but again, when you look at that relative strength line, it puts that move in perspective that it's just not strong compared to the S&P 500. And so you have to ask yourself the question, why would I have that individual stock risk when I'm not getting the return? I could just have the S&P 500 get a better return in this. So again, unless there's some type of turnaround here, which this could be the catalyst, but that's what you're kind of hoping for and betting on in this case.
All right. Well, thank you, Justin. And make sure you tune in tomorrow morning to IBD Live, where the conversation continues with David Ryan, our weekly contributor, a protege of IBD founder Bill O'Neill, longtime portfolio manager at O'Neill and Company, hedge fund manager, mutual fund manager, as well. So a lot of great growth investing experience under his belt, and looking forward to this week's educational lesson, which, if we have time, I believe is going to be David talking about his best trade of the year and his worst trade of the year. So excited for those juicy details. So make sure you tune in, investors.com/IBD Live. Justin, were you gonna comment on that?
Nope, I was just
okay.
I was just commenting on your enthusiasm. It was funny.
Okay. All right. Thanks, everyone. We'll see you back here tomorrow.